about TCS and Tata Elxsi. Now, TCS was a miss. The company missed street expectation on the margin front. The top line growth was driven largely by the India BSNL revenues. If you strip that out, in fact, BSNL contributed 72% of the incremental revenues. But the other key markets, like North America, for instance, was down 3.5% on a quarter-on-quarter basis. So it's caused some disappointment, amongst market participants. Many analysts have gone ahead and lowered EPS estimates by about, 1 to 2%. Also, the thing is that Q3 is unlikely to be any different compared to Q2 because one, the BSNL contribution will stay in Q3, and two, Q3 has furloughs. So Q2 has been subdued and Q3 is also likely to remain subdued on account of these two factors. The question is the recovery from here on, Q4, once the BSNL contract, contribution wears off and BFSI, etc. in North America starts showing more traction. We're already seeing green shoots in BFSI. BFSI revenues went up by 1.9%. The fact that the company hired employees for the second straight quarter is also fairly encouraging. Manik Taneja, Executive Director, IT Services and Internet at Axis Capital, is with us on this show. Manik, thank you very much for joining in. First, wanting to ask you that, the street is a bit disappointed with TCS's numbers, but most brokerages are bullish. But you have a sell call on TCS. So first, why the sell? And then we'll get to the Q2 numbers.
Good morning, Rima. So we've had a negative stance across most of the tier one IT services pack, and the sector excitement through the course of calendar 24 has basically been hinged on macro recovery, and the rate of change excitement continues to disappoint people. So if you recall, in January, February also, people are very excited about an improvement. Some of the expectations got dashed with the way companies guided in April. And with the way things have been progressing, I think the direction of improvement continues to disappoint the street, and that's where we have a negative view across most of the names.
Okay, so you're not convinced about the recovery. The recovery is likely to fail. We've had these promising starts in the past, but they haven't sustained. So now let's talk about TCS. What were the key highlights for you, and what is the takeaway for the rest of the large cap pack as it reports numbers next week?
So I think you summarized it quite well when you said that bulk of the incremental revenues have been supported by India/the BSNL deal, and which is where you've seen margins also come off on a sequential basis, which is contrary to the usual trend that you witness in September. And this is the first time since Q2 of FY20 wherein margins in the second quarter are lower than first quarter. Going into next year, while there is certainly hope about BFSI recovering, there is also hope around, given the kind of data points that keep on emerging from the US, that retail industry segment should also pick up. But TCS in particular has to also contend with the drag from BSNL going into next year. So thereby, with the way street expectations are possibly of about between 8 to 9% growth for TCS in FY26, I think those estimates need to possibly come down to closer to about 6 to 7%, and that's where those estimates should settle. Finally, I would just remark that Indian IT companies continue to see this round of excitement build into the stock prices. Or if you look at any of these names, they are up between 15 to 25% on a calendar year 24 year-to-date basis. But none of the global IT services stocks are reflecting any excitement about macro pickup. So that's how I would leave it.
Just to get the numbers right, next year consensus is expecting 8 to 9% top line growth. You think it should be closer to 6 to 7%. What about on margins? Because if this BSNL contract is hurting margins, will it not impact next year's margins? And what is consensus EBIT margin expectation from next year, your own, and therefore EPS numbers too?
Sure. So from a margin standpoint, I'll just step back and first of all talk about the fact that TCS did extremely well on margins in FY24, and that was supported by significant rationalization on subcontracting. And some of these costs essentially are reversing in FY25. And given the headwinds from the BSNL contribution, margins in FY25 are now going to be flat on a year-on-year basis at best. Certainly, with the way BSNL contribution will reduce next year, margins margin expectation going into FY25 should be expecting there should be some improvement built into the estimates, and which is what Street and us are already factoring in. This extent could be anywhere between about 50 to 70 bips, depending on different market participants.
Tata Elxsi, Manik?
Yeah.
Is Tata Elxsi a stock that you track?
Yes, we've had a sell on that stock for the longest amount of time. And if you see, this company has been struggling outside of the transportation segment for the last couple of years. And with the news flow that one is picking up from global auto OEMs, I will not be surprised that you see some moderation in growth in the transportation vertical in FY25. And even within the transportation segment, this company's fortunes are significantly dependent on group companies, which is JLR in their case. And thereby, I am not too excited with the multiples that this company enjoys, and we've had a sell rating for the longest amount of time.
And what about Infosys? Is the street's optimism going into Infosys earnings also going to be unfounded by the end? Because the stock since early June, has rallied about 35%. And numbers are expected to be pretty robust in Q2.
Sure. So I would say Infosys's valuation discount to TCS has narrowed significantly compared to historical averages. I think for that valuation sustained at current levels, Infosys should not be disappointing either on second quarter numbers or the upgrade in guidance that the street believes Infosys should be doing. The arithmetic certainly is in their favor, but we'll see as to how things play out, because in the past also, there have been occasions when, despite very modest arithmetic, Infosys has desisted from increasing the outlook after second quarter numbers. But I would say an inline to a better performance in second quarter, as well as an upgrade in guidance, will be required for the excitement in Infosys to sustain.
Okay, Manik, appreciate you joining in, giving us your take, sounding more or less cautious on the tech space, as you've been for the recent past. Thanks a lot for joining in and giving us your take. Let's get